Good evening, everybody. Matrix here, and here's my watch list for May 10th. Okay, tonight's watch list is going to be a little longer than usual because tomorrow we have the highly anticipated Uber IPO. So I'm actually going to be looking forward to trading Uber IPO because I've been looking forward to it for a few weeks now, if not a whole month. So before we start into the watch list, I guess I'll talk about Uber first, as a lot of my friends as well have been anticipating my thoughts on and my plan on how I'll be trading it. So let's take a look at the big picture first, okay? The SPY, the overall market has been selling off due to the Trump tweet about China trade wars and adding more tariffs to China and everything. And tomorrow we actually get the news of whether or not they will implement the extra 15% tariffs onto China on the $200 billion worth of goods. And if they do come through with it, the market's not going to react well. Ever since the warning tweet of Trump here on a few days ago, the market has been kind of like a major pullback, right? And tomorrow is the day when the news comes out. So with that said, pullback from the major highs here, all-time highs here, market conditions is not good, and it's very volatile. Okay, with that said, I actually think with the exit of money from the market, people will be actually looking for something to put their money into. And that in itself is a plan for or a thesis for me to think that the Uber IPO is going to be quite successful. So with that said, let's get into some fundamentals first. So that's the big picture overall, the SPY. So Uber fundamentals. Now, these fundamental notes are actually just all over the news. If you just do a quick Google search and watch some news, you can find these notes. But a really quick recap, okay? So at the beginning, when they first talked about Uber IPO, they were saying they wanted to price it around $80 a share. And now today, finally, they come. They actually have decided on well, for the past few days, they've decided to open the IPO valuation at $44 to $50. And today, they came out with breaking news saying that, oh, okay, we're gonna be expecting the open to be around $45, which is the low range of the $44 to $50 mark here. Now, thinking about this, with a lot of the prior IPOs we've watched and seen this year, a lot of times, even when they came out with a solid number saying, oh, we're going to open at 44, they tend to open higher when it first comes out into the market. That's because a lot of people have the smart money and the rich folks to say they have already bought in even before it comes into the market and let us retail trader trades, right? They're expecting to offer $180 million worth of shares. Okay. Oh no, 180 million common shares, not $180 million. So 180 million common stocks. Okay, and that's a valuation of about $82 billion. Okay. The lead underwriters here are Morgan Stanley, Citigroup, Goldman Sachs, Bank of America, Merrill Lynch, and Barclays. So these are some heavy-duty, top-notch Tier 1 underwriters, okay? With that said, Uber is the most anticipated IPO to come ever since Alibaba IPO'd. And this, again, it's all news that you can find in the articles. Okay, so with so much hype building into one of the most worldwide anticipated IPO, I personally think that the leading underwriters have a lot to prove and to the world, and make sure they get a good name out of this IPO, and they will try as hard as they could to protect that bottom line of 44 bucks to 45 area. Okay, so with that said, what I want to do is I am expecting a bounce. If it pulls in, if it holds, opens higher and pulls in, I am expecting a bounce from the 45 and the 44 area, and from there run back up on the day. Comparing this IPO with Lyft is totally different. I mean, Uber operates in 63 different countries around the world, 700 cities overall, okay? And that's, they also have other sources of income, for example, like Uber Eats, and they have some freight income as well, where Uber Eats, let's take a look here in the news. Uber Eats, they have more than 15 million monthly active users on the platform, okay? And they are saying that that's only 1% penetration in the market of food delivery service, right? I don't think Lyft has that, okay? And also, they have launched its freight segment in May 2017, and they have contracted more than 36,000 couriers to serve more than 1,000 shippers. So shippers, main shippers, including like companies like Colgate and Anheuser-Busch InBev. Okay, so those are some major brand names. Overall, I think Uber has a major dominance over Lyft in market share as well. I want to talk about some revenues, though. I mean, in 2016, Uber made $3.85 billion in revenues. In 2017, they made $7.93 billion. And then in 2018, they made $11.27 billion in revenue. So as you can see, the numbers are growing revenue-wise, even though they are still burning a lot of cash and losing money as a company. But year over year, they are on an increase of revenue. And I think overall, the market likes that. They are not buying into an immediate gratification, but I think investors like to buy into growth stocks. And with these numbers coming out, it definitely shows a sign of growth in the future. And in the future, though, so you got to really think about that. That's another reason why I think the IPO would be a little bit more successful than Lyft. I mean, we are talking about growth stocks, right? I mean, take a look at Tesla. I mean, it doesn't make sense. Tesla doesn't make money either, and they're burning through cash as well. And yet the stock is at like $200 and something, right? When you are trying to make sense of something, that's when it doesn't work when you're trading. I mean, I'm just trying to think overall in the psychology of how the market works, right? With that said, I do think the IPO will be successful overall, basically because of one, the overall market view, the overall fundamental, the SPY is downtrending, right? And with the mass exit of institutional money, they need to find a place to put the money back in to work for them. And with the Uber IPO, it's an excellent spot to actually put their money into. Also, if Trump comes up with a tweet tomorrow saying, oh, we're just going to hold on to the tariffs and not tax China just yet because we're still in talks, that would be a good sign as well, and it would get the market back in. People will be happy to pay and put their money back into investments again, and that will see an uptrend as well. So that's point one. Point two, Uber has massive tier one underwriters standing behind this IPO, and they do have something to prove, right? We're talking about big names like Morgan Stanley and Goldman, right? So these guys don't want to fail, okay? They are the #1 in the world as underwriters. So they have a lot to prove, and I think they will protect that low end of the IPO pricing. Thirdly, I think Uber, comparing to Lyft, it has major market shares, and it's dominating in the ride-hailing service compared to Lyft. So I really think comparing Uber to Lyft is basically apples to oranges. So I don't think that point actually sticks out too well, in my opinion, and I would totally disregard it. I mean, if we're just looking at IPOs alone this year, we've had a lot of successful IPOs that still holding above its initial IPO pricing. For example, Pinterest, Zoom, Levi's, etc., etc. So overall, I think the IPO market for this year is doing pretty well. And point four, Uber being one of the most highly anticipated IPO out there for the past few months. I mean, the whole world is watching this IPO. I think this is going to generate a lot of hype, and people, the whole world and their grandma will be watching it. I also think if I talk about Uber, I mean, I'm thinking about when the company first started to go public about 10 years ago. I'm thinking to myself, oh, I want to be in Uber, right? And now it's actually finally the chance for a retail guy like me to be able to get in there and trade this thing. I think the psychology of FOMO kind of gets to people. They're thinking, okay, finally, we get a chance. I missed the Facebook IPO. I missed the Google IPO. I missed the Baba IPO. And now here we are with a major anticipated IPO. I'm not going to miss this. So I think people will have that kind of mentality going into the IPO. So let's go to the plan. So the plan is, I do anticipate that once the IPO opens up to the public tomorrow, I do anticipate it trading higher than $45, perhaps around 50, maybe even more. We don't know. Like, we have no idea where it opens. And when trading these IPOs, the reason why I actually like trading these IPOs is because there really is no chart history for people to trade off of. So what we know right now is the opening price of a technical level at 45, right? We have some sort of a range at 45 to 50, okay? And then we have the opening print. So the very first bar where it opened up, for example, let's say it opens at 52 and a half, right? That level is going to be very, very key. So my plan is, I want to, one, buy in front of 45, expecting 44 to hold, okay? Two, I do anticipate it opening higher, and as it comes down, because every time most of these IPOs that opens higher, it does tend to have a few bars of selling off. Like, for example, maybe like half an hour of selling offers is because all the insiders are taking profits. And I do expect it to dip a little bit as it comes down and get back to this base level at 45 or the opening print or whatever. So that opening print and 45 is going to be a very key level that I'll be watching. As it pops and gets up and break over level after level, I actually do want to add into the breakouts. Not adding heavily, but add a little bit. Once I see some sort of level hold and then consolidate and then hold another level, I want to add before the next run up, and then watch it hold, and then I want to add on the next breakout again. And then we have this stair step pattern where I can have my risk alleviated at each technical level on the way down, right? So with that said, I do want a long, and I do want to get in. Now, with 180 million shares being offered. They anticipate the closing of the IPO to be May 14th. I do expect the spread to be pretty tight, but we don't know, right? So right out the gates at the open, I'm going to watch, first of all, is try to gauge the spread, right? With this massive IPO, I'll be using $1 at the very minimum, $1 as risk. So every whole dollar up. And we'll have to see how the spread goes. I mean, if the spread is very, very wide, then I guess I will have to do $2 to $3 as my risk level and shrink my share size a little bit. But as it comes down, I'm going to try to peg the, let's say it opens at 55, right? So as it comes down into 50, I want to try to peg it and put like a small tester size on at 50. And then if that snaps, I'll take it off right away. And then as it comes down each whole dollar, I want to do a small little, very, very small little tester size and try to get in and test and see how fast I can get out as well. Yeah. So with that said, I am more long bias just for tomorrow only, and I want to buy in front of 44 and 45 level. If it comes down and starts holding that level, and then it keeps consolidating along that line, I do want to size up a little and add in and add in and add in, and I expect it to trend up for the day. Now, of course, with a long bias, there always has to be another plan for a short bias because it is IPO day. So, let's talk about the criterias of how I want to short. So, if the stock actually trades under 44 and 45 area and unable to reclaim it, that's where I want to short it for tomorrow. And actually, with my 3 years of learning experience in trading, I have seen some IPOs failed. Okay, so for example, we have seen Lyft failed, the most recent one. But a couple of years ago, I've watched Switch failed as well, and I've watched ADT, the security company, failed as well. But those weren't really highly anticipated IPOs. So with Uber, I don't really see it failing, at least for tomorrow. And that's basically my plan on Uber. So let's get right into the watch list. We have a lot of tickers in play tomorrow. I guess I'll talk about Roku first, as I did trade at Roku today. This was on my main watch list yesterday, and this thing ran crazy, right? It shot up 27%, up $17. And as you can see, I have marked off some key levels here, right? Basically, the stock just ran stupid and never really pulled back, right? It had two pullback candles. That's basically it. This $82 level is when it pulled back, and it's a very key level. As you can see, after hours, it continued going up a little bit and then topped out, and then now it bounced off the 82. And 82 throughout the afternoon, it made some sort of a key support as well, right? So this is a key area. Now, for Roku to continue running, it must hold about this 82, in my opinion. That would get me interested and still continue to long the stock. Oh, by the way, I did long the stock today. A lot of people actually got crushed trying to short this thing on the first day of massive earnings and got squeezed, thinking that, this thing cannot go any higher. And obviously, they got crushed. And with that said, this is a really nice example of a trap and squeeze. I mean, for example, if you look over here on let's change this to a 5-minute chart. If you look over here on the 5-minute chart, I mean, it's very easily explained. So it runs up hard, right? It hits a nice whole dollar, although it hits a nice whole dollar of 78 and then starts pulling back, okay? Now, if I zoom back into the 1-minute chart and find that spot there, you can tell it's a trap and squeeze, right? I personally have fell for this trap and squeeze way too many times over my years of learning to trade, and today I knew better. So I got in on the long side instead. So from here at the 78 level, it pulled right back down, and here where it broke through and topped out on this little pull here, this was the trap, right? People were seeing a lot of selling coming in from 78, and then it just squeezed again. So some people would have probably gotten in here. You see this lower high from the 78 mark. So 78, and then fail, lower high. This could have been a trap here. People, short sellers could have gotten in here and got trapped. And when it couldn't fail, it just squeezed them right out, right? So basically, throughout the whole day, this is what really happened on Roku. It kept coming out with patterns of a trap and squeeze. So for example, here's 79.50. Look at this massive hard pull, right? It snapped to 79. Some breakdown shorters would have gotten in here, and from here they would have probably added more when this failed, right? They would have been happy, and then they got squeezed out. Even if they hadn't got squeezed out, this candle, they probably would have added some more and eventually got squeezed out from here. Right here at the $80 mark, I mean, this is a very key trap and squeeze area as well. I mean, nice psychological whole number. We have a doji and a third doji candle. How do you not short here? Because I would have shorted here. The old me would have shorted here, definitely. And I would have gotten squeezed out as well, right? With this hard pull here, right under 30, even if they hadn't got squeezed out, or even if they never fell for this trap, they would have gotten in here as well, risking a little bit under 30, under 80 or under 80.50 here. And then they would have came down and paid themselves at the 50. When this 50 snapped right here, this 50 EMA snapped, they would have thought that they were in the money, right? And then it bounced right back up. This was a nice turning point telling me, oh, it's another trap and squeeze. And obviously you see it coming right back up, right? And then the 80s again, right here, this candle, you see that? That's a trap and squeeze. Right here on this wiki, seller's wick, that's a trap and squeeze. Okay, so learning to identify the trap and squeeze on first day earning winners is very important to make sure you don't get on the wrong side of the trade. For myself, I long this today. I think I long this. Let me check real quick on my tickets. My very first buy, I'll tell you what time it is. 11:06 was my very first buy. So let's get into it. I mean, might as well do a recap because this is going to be a longer watch list video, right? So, and I think I'm back. Let's see. Am I still recording? Okay, we are still recording. I'm right back. So I got in, my very first entry was 11:06. So right here at the break, I saw this bounce off the 50 and I got in here. And I basically just rolled it up and managed the trade. My final exit was 81.66. So, and my first entry was 79.17. So I got a nice 2 points on it, 2.5 points on it overall. But let's get back to the watch list. Enough of the recap and enough of the little trap and squeeze lesson here. Okay, so it needs to hold 82 to continue to run. A lot of short sellers are watching this, and perhaps I'm not sure if they're in it or not yet. The way it's holding its highs, I am anticipating a gap up tomorrow above these highs. Okay, if it gaps up above the highs here, I'm anticipating right out the gates it dips and profit take and try to close the gap where it gaps up and then run again. Overall, it had ran a lot. And looking on the daily chart over here, this is the prior earnings days. And it also had a massive move. The next day, it opened kind of flat. And then it had it made a doji day. So I do anticipate this to be quite choppy tomorrow. Coming down here, if it opens flat and it dips, right? If it dips under the 82, I'll be looking at the main support of 78. Okay, coming down here, we have 79.50 as support area, 80, 40 over here as another support area, and then finally 81.35 here for the late afternoon support area. This support area is actually pretty weak in my opinion because the volume wasn't really there. However, this support area at 10:30 this morning, this $80.40 area, this is one of a key support. And coming down here to the 79.50 as well, you see how the stock actually traded here quite often during the day. This is a key support area. So ROKU, I'm looking for bounce from one of these support areas. Next up, we have Lyft. Lyft is very interesting. Let's take a look here, load some drawings up. I think I talked about Lyft yesterday, and the drawings actually still plays, right? So let's load some drawings right here and zoom out a little. Now, Lyft has a massive down day from its earnings day, right? Today, it reclaimed a little bit, and it topped out throughout the whole day. It grinded up, and today it topped out at this key level of 56.50 right here, which I marked off from I believe yesterday. So this up grind here was a consolidation day from the mass sell-off, right? Overall, I'll be watching the 55 key area. Okay, I do think this is a little bit of profit taking at the end of the close, right? And if it cannot get above 56, I think this thing is done, and it's about to have another leg coming right back down to the lows here at the 52.50s. Okay, so 55.50 right here in this area is pretty key. Okay, and 56 as well. So I'll be watching these two areas and see how the stock reacts from there. Skip back into the 5-minute chart. Okay, as you can see, it's trading under the consolidation area. So we have a resistance zone right here, and 56.50 key resistance area, as you see from the past prior 2 days as well. So my plan is for it to stay under 55.50. Then I like it for the short. If it gets above, I'm just going to leave it alone and let it do its thing. Overall, I do only want to short this stock because of the negative earnings reaction. I'm just waiting for this consolidation period to be over. And if it stays under 55.50, that would actually confirm to me that it's done. Okay. Intel. Intel was a major miss today. You don't see the day here. Let me see. Oh yeah, there it is. Intel was a major miss today. Okay. They basically came out with news that they're cutting their profit margins. Okay. And the overall market doesn't like it when you're telling them their company profit margins are getting cut. Overall, this reaction was very justified in my opinion. It's a piece of shit. Well, it's not a piece of shit, but the news made it a piece of shit, right? I want to load some drawings right now here on Intel, INTC. And Intel is a tighter trader for tomorrow, in my opinion, because it has sold off so much. However, I am still bearish on it. What I really want to see is how this 47 holds up tomorrow, and especially the high of lunch here at the 47.30s. I want to see a cover pop into this area and reject and fail. And I am anticipating the stock to trade sideways a little bit and then wait for the Trump news to come out as well. So this short here would be pretty agonizing as a wait, and I do highly anticipate it to be slow. If it comes down and breaks the 46 here, okay, I want to mark off 46 for you, which is the low of today. There is a lot of room to come down. Let's take a look at the big picture. I mean, overall, 46, quite a key area here. And then we have the 47, which is let's see, right around here. Yeah, okay, 47. So I want to mark that off. You know what? Let's do a horizontal line right across. Okay, so that's where I marked off 47. We're trading a little bit under it right now. It's basically this candle, okay, on the daily chart. This is the buy point, okay, of the start of the year. So at the start of the year, it started rebounding from the sell-off, and then consolidated, and once it cleared this buy point, this is where everybody bought and got in, right? And 4750 here was their breakout buy point, okay? So that's why I marked it off here at 47 and 4740 area. This is their buy point, and if it pops and stays under, then they're gonna get out and sell. So that's Intel. Next up, we have NVIDIA. NVIDIA sold off huge, but made a nice rebound today. Mostly because of people anticipating the Trump tariff news, right? Computer chips and the semiconductors here on NVIDIA, they do have some deals and sourcing parts from China. So overall, this 170.75 is a key level that I'll be watching. If it trades under here, I like it for the short. As it come up though, I mean, late day, we do see it top out, and then short sellers trying to pile in here. If they cover pop it tomorrow at the open, I'm looking for 172 to hold it down, okay? 172 is a very key area right here. Let's take a look right there. As you can see, it's a prior days. It's today's open. It's prior's day opening price as well. Okay, and the day before it made some sort of support here at 172. So this 172 is a key price point. I also have a resistance area of this 170.150 marked off. So this 170.150 is the opening price high where we have massive volume, and this is a key resistance area as well. Now, if it does get above 172 and starts holding, I do anticipate this to magnet right back up into yesterday's close at 174 over here, and then from there I'm looking for a fail back down. So we do have a key support area of 168, because if I'm looking at this 168 area coming over here, as you see the sell-off happen, okay, this 168 was prior resistance. It sold off, and then it bounced. It made a higher low, but this wasn't a buy yet, right? As it comes back up and clears the VWAP, tested 168, failed again, and then it rode the VWAP right here when it got scooped. This was the buying point. This was the buying point right here. So this 168 was where they bought, okay? In my opinion, where they bought today. And as they took this ride up, they probably took some profits coming down into this, and some might still be holding. If 168 do snap though, a lot of stop loss is going to start happening, and we're going to get a pull down right back down to the lows here at 165. So that's NVIDIA. Next up, we have Apple. Apple, on the 30-minute chart, we have a nice downtrend here from a few days ago. Okay, Apple, if Trump comes out with news tomorrow and it's bad news, I think the stock will continue to fall. Let's load up some drawings real quick. AAPL. Oh, these drawings don't even match. Okay, let's do some quick drawings then. 201 is where the downtrend meets, okay? So this 201 area, very key, okay? I want to see it trade under 201 for me to continue to be bearish on this. I do anticipate Trump coming out and saying, oh, we're going to add some more tariffs and we're going to fuck China up with the trade wars. So that's what I'm planning for Trump to tweet. So that's my first opinion. It's a very personal opinion, though, so don't really take my word for financial advice. This 203 area is a very key resistance area for the past couple of days, but I do see shorts piling in today from the open. This 201.50 is a nice resistance line right here, as it was a major highs today where it topped out, right? So I am expecting a little pop and a drop from here. Also, the orange line here is 50 MA on my 30-minute chart. The stock is following on this downtrend. It's following this 50 MA quite well. So I'm going to use it as a guide. If it can't get back over, my thesis is going to be short. Some resistance areas would be 201, 201.50, 202, and 203. We do have a gap to fill right here. So if it does get above 202, then it's going to magnet and fill the gap. But you can see for the prior 3 days, I mean, 201 acted very well as a support, and now it's snapped, right? This 200 level is key as well. So if it trades under 200, if it trades under the 200, I will call it. I will definitely have more conviction in shorting this as this thing tries to pop back up. And as long as it stays under 200, I want to add on every breakdown, right? Okay, so that's my plan on Apple. That's basically it for my watch list this evening. So I hope you guys enjoyed my personal opinion. Once again, it's a personal opinion on the watch list and my plan for tomorrow. Make sure you hit the like button and subscribe. I know this video has been longer today, basically because it's pretty in-depth, and also we talked a lot about the Uber IPO and how I want to play it tomorrow. So with that said, I'll be looking forward to seeing you guys tomorrow morning, and have a great evening and have a great trading day. Trade safe. Ciao.